Imagine a world shaped by a secretive, almost mythical society. Not spies or ancient orders, but fiercely intelligent individuals operating right at the very edges of global capitalism.
Yeah, often deep in the shadows.
Exactly. Making fortunes from the essential resources that fuel our modern world. They're kind of the unseen hands moving the levers of global supply and demand.
Influencing everything. The price of gas, national stability.
Right. Today, we're taking a deep dive into that audacious world, a place where risk is basically currency and power is relentlessly bartered. Our mission today is, well, to unpack the fascinating, often shocking, and always impactful story of these commodity traders. We're guided by Javier Blas and Jack Farchi's incredible book, The World for Sale.
Fantastic book.
It really is. We'll explore how a relatively small, intensely private group of players came to control so much of the Earth's most vital resources. Oil, metals, grain.
And often with remarkably little oversight. That's key.
Totally. And the profound effects they've had on geopolitics, economies, and even on your daily life. It's a journey that reveals just how interconnected and, well, sometimes morally ambiguous our global economy truly is.
And this deep dive, it draws from an astonishing array of sources. We're talking extensive research, hundreds of interviews with seasoned traders, high-level government officials.
Real insiders.
Absolutely. Plus, thousands of pages of previously unpublished documents. It paints this vivid, almost cinematic picture of individuals and companies who act as this crucial, yet largely invisible force.
From war-torn deserts in Libya to, the discrete trading floors in Switzerland?
Exactly. It's an in-depth exploration into a world many people don't even realize exists, yet its machinations directly impact, the food on your table, the tech in your pocket, everything.
So you're about to discover how these last swashbucklers of global capitalism navigate geopolitical crises, shape entire markets, and amass staggering wealth.
All while staying largely unknown, at least until recently.
Right. We'll delve into their sometimes surprisingly humble origins, their audacious and, frankly, sometimes questionable methods.
Scandals, too.
Oh, yeah, the scandals that have often followed them. And their evolving, increasingly scrutinized role in a world grappling with huge challenges like climate change and, a demand for greater transparency. So to really grasp the sheer audacity and scale of these traders, maybe the best way is to just dive straight into an example that, seemed almost unbelievable. Let's go back to 2011.
Libya.
Exactly. Libya engulfed in brutal civil war. And this independent trading house, Vitol, risks over $1 billion to supply fuel to the rebels fighting Gaddafi.
Just imagine that scene. Tankers operating under cover of darkness, slipping into ports amidst gunfire.
With fighting raging just kilometers away from crews, sitting on top of, hundreds of thousands of barrels of highly flammable fuel.
It's insane. And it wasn't just a daring business deal. It was like a perfect illustration of their core principle. They thrive where others are terrified to go.
Right. They embrace geopolitical chaos as opportunity. They step into power vacuums where governments or major corporations just can't operate.
Yeah, their structure allows for a speed, a flexibility, a risk appetite that others simply don't have. They were essentially betting the entire company on who would win a civil war.
Incredible.
And what's truly fascinating here is that this immense risk and the potential for such huge geopolitical influence, it's concentrated in surprisingly few hands. The scale is staggering, but it often goes unnoticed.
Give us some numbers.
Okay, so the 5 largest oil trading houses. Together, they handle something like 24 million barrels a day of crude and refined products.
24 million barrels a day.
Yeah. To put that in perspective for you, that's almost a quarter of the entire world's petroleum demand.
Wow.
And it's similar in agriculture. The top 7 traders move just under half the world's grains and oilseeds, literally feeding billions.
Half the world's grain.
Pretty much. And in metals, vital for all our tech, right? Glencore alone accounts for 1/3 of the world's cobalt.
Cobalt for EVs, smartphones.
Exactly. So these aren't just passive middlemen connecting buyers and sellers. Their sheer volume, their speed, their access to information often means their activities are what effectively set global prices.
They're price makers, not just takers.
Absolutely. Their agility, their willingness to jump into volatile situations gives them this unparalleled market-shaping power. They can exert influence on a scale that really rivals national government sometimes.
Okay, so that's the power. But how did it get so concentrated? How did this small, secretive group gain so much influence, often with so little oversight? The authors point to, what, 4 big shifts?
Yeah, 4 seismic shifts in the global economy that really created the perfect conditions for their rise. It wasn't just one thing. It was this convergence of massive global changes that basically reset the whole game.
Let's break those down. What was the first one?
Okay, first, the collapse of the Bretton Woods system back in the early 70s.
Right, when the dollar came off gold.
Exactly.
Yeah.
Currencies became free-floating, exchange rates went wild, fluctuating constantly, and this created huge opportunities for arbitrage.
Making money off the price differences in different markets.
Precisely. Buying and selling currencies, commodities, simultaneously in different places.
Yeah.
These traders became incredibly adept at it, turning currency chaos into massive profits.
Okay, so that's one. What's next?
The second big shift was the wave of nationalization of resources, especially by newly independent states.
Post-colonialism kicking in.
Right. Countries in the Middle East, Africa, they wanted control over their own oil, their own minerals. They kicked out or sidelined the established Western majors, the famous Seven Sisters.
That big oil cartel.
Yeah, and this created fragmented markets. These new state-owned companies, they often lacked the global networks, the market access the majors had.
So the independent traders stepped into that gap?
Perfectly positioned. They became the crucial link between these nationalized resources and the world market.
Makes sense. What was the third factor?
The third one was China. China's spectacular economic growth, particularly from the early 2000s onwards.
The manufacturing boom.
Unbelievable demand. China, industrializing, urbanizing at this insane pace. It created this seemingly endless appetite for commodities. Think about copper.
Okay.
In 1990, China used about as much copper as, say, Italy today. A staggering 1 out of every 2 tons of copper produced on Earth goes to a Chinese factory.
Half the world's copper.
Yeah. Feeding its manufacturing, its infrastructure boom. This explosion in demand drove commodity prices sky high, and the traders, with their global networks, were perfectly placed to feed the beast.
Right place, right time. And the fourth shift.
Finally, the fourth shift was the financialization of the global economy, really kicking off in the 1980s.
Meaning?
Well, before, traders needed huge amounts of their own capital to pay for every massive shipment. But with banking growth, new financial tools, they used borrowed money, lines of credit, bank guarantees.
Leverage.
Exactly. This let them scale up dramatically. They could handle much larger sums, trade volumes that are unimaginable before. These 4 things together, boom. Extraordinary expansion of wealth and power for a handful of companies.
And the scale is just mind-boggling. You mentioned their turnover.
Yeah, get this. In 2019, just the 4 largest traders had a combined turnover of $725 billion.
$725 billion.
That's more than the total exports of a country like Japan.
Wow. Okay, so that's the how on a macro level.
Yeah.
But these massive changes needed people to actually exploit them. This didn't just happen overnight. These modern giants, Vitol, Glencore, they stand on the shoulders of real pioneers, right?
Absolutely. Individuals who saw opportunities where the established powers of their day just didn't. They really laid the groundwork.
So tell us about these early trailblazers. Who were they?
Well, one significant figure was Theodore Weiser of Mabanaft. Back in 1954, this was audacious. He defied the Seven Sisters, the oil majors, by getting direct oil deals with the Soviet Union.
During the Cold War.
Exactly. It was seen as an act of insolence. The majors actually punished him initially, refused to do business with him, but Weiser persisted. Made a daring trip to Moscow in 54, forged a direct link, signed a diesel contract in 56, later bought crude, basically creating an international oil trade outside the majors' control.
Gutsy. Who else?
Another key figure was Ludwig Jesselson. He transformed Philip Brothers Fibro from a mid-sized scrap dealer into a metals trading giant. He pioneered trade with communist Yugoslavia.
Again, crossing Cold War lines.
Yeah, got this groundbreaking contract with their state metals monopoly, Jugometal, to sell its entire output. By 1950, that single deal was worth like $15–20 million a year, way more than the company's total sales just a few years before. Showed how these unconventional relationships could yield huge profits.
And in agriculture.
There you had John H. McMillan Jr. He took Cargill global. They were originally focused on U.S. Midwest grain, but he expanded internationally. Cargill even exported U.S. grain surpluses to the Iron Curtain.
Selling to the Soviets.
Yep, a big $40 million wheat deal with Moscow in 1964. Cargill itself called that deal the underlying spark for its record profits. It was all supported by U.S. government subsidies trying to get rid of excess American grain. These guys weren't just traders. They were like economic diplomats, forging links that defied politics.
What's fascinating, too, is the culture they built. It sounds almost monastic, incredibly intense. That seems to echo even today.
Oh, absolutely. The foundational culture was built on relentless hard work, fierce loyalty, and this deep sense of partnership within a small, tight group.
Grueling apprenticeships, starting in the mailroom.
Exactly. Coding and decoding telegrams, learning the business from the absolute ground up, working crazy hours. Felix Posen, who later became a top exec at Mark Rich Plus Co., started that way in the 50s. He said, if you didn't want to work hard, you shouldn't join Phillip Brothers. Simple as that.
Instilling grit and loyalty.
Totally. This intense, almost military-style training created this incredible talent pipeline. It fostered innovation, adaptability, but also maybe a willingness to push boundaries, ethically speaking.
And it produced giants like Mark Rich himself, right? He came through that system.
He did. Started as a fibro trainee in New York, 1954. That immersive training, the focus on personal connections, global networks, it gave them an unparalleled edge in market intelligence, fiercely protected information, sometimes better than governments could manage.
So the stage was set by these pioneers. But the real upheaval, the moment the world really woke up to oil's power and its geopolitical impact, that was the 1970s. What happened then that just blew everything wide open?
The 70s saw this dramatic, almost cataclysmic shift. Oil demand had already skyrocketed globally between 48 and 72. Consumption tripled in the U.S., went up 15 times in Western Europe, 100 times in Japan.
Huge growth.
Massive. Then, 1971, Nixon drops the gold standard, weakens the dollar. This hits the OPEC nations hard because their oil is priced in dollars.
Devaluing their main export.
Exactly. So, emboldened by that, plus rising resource nationalism, OPEC countries started aggressively nationalizing their oil, seizing control from the Seven Sisters.
Shaking up the old order.
Completely. Suddenly you had this free-for-all market. Prices went nuts. From a stable $2 a barrel for years to over $10 in '74, then soaring again later. Pure volatility.
Perfect storm for traders.
Absolutely. The whole center of gravity of the oil industry shifted, away from the majors' HQs in London and New York towards places like Switzerland, Geneva, Zug, Basel, where these independent traders were setting up shop, ready to ride the chaos.
And right at the heart of this, almost embodying the whole era, was Mark Rich, a Phillip Brothers trainee who became this anti-establishment maverick.
Rich was something else. Described as brilliant, multilingual, incredibly hardworking, he had this uncanny knack for spotting trends. Famously said, I just thought it should be possible to trade oil despite the Seven Sisters.
Just gonna do it.
Yeah. Known for his drive, arriving before dawn, sarcastically greeting latecomers at 8:30 a.m. with, good afternoon.
Sets the tone.
Definitely. His key innovation, the thing that really made his name, was using the Eilat-Ashkelon pipeline for secret Iranian oil shipments.
How did that work?
Tankers loaded oil in the Gulf, officially heading for Gibraltar for orders to avoid suspicion. But secretly, they sailed to Eilat on Israel's Red Sea coast, unloaded, then popped back up empty in Iran a few days later for another load.
And the oil went across Israel.
Yep, through the pipeline to the Mediterranean. The Sunday Times called it the mystery of the disappearing tankers in 1970. It was clandestine, audacious, directly defying the majors, creating new, profitable routes where none officially existed. Showed his ingenuity, his need to go against the grain.
But that ambition, that drive, it eventually clashed with the old guard at Phillip Brothers, didn't it? Leading to a pretty dramatic split.
Oh yeah, big time. In 1974, a dispute over a $1 million bonus to be shared between Rich and his partner Pinky Green led to this really acrimonious departure.
$1 million seems almost small change now for these guys.
Right. But it was the principle, the clash of egos. His mentor, Ludwig Jesselson, was deeply hurt, called it a very sad chapter, said they were like my own sons.
But the split was pivotal.
Hugely pivotal for the industry. Rich's new company, Mark Rich Plus Co., immediately attracted big banks, Bankers Trust, Chase Manhattan, BNP, even though Fibro warned them off.
The banks saw the potential.
They recognized his unique talent, his risk appetite, his network. Rich himself described his philosophy as walking on the edge, balancing his finger on a knife blade. That drove his success, but also set the stage for his later troubles. It definitely created a precedent for daring independent trading.
And Rich wasn't the only one jumping into this new volatile market. The late 70s, early 80s, it was a whole new landscape, right? New adventurers seizing the moment.
Totally. The 1979 Iranian Revolution was another massive shock. Sent oil prices from around $18 to $28 a barrel almost overnight. Spot prices hit $40, even $50 in the panic.
Chaos equals opportunity.
For them, yes. You saw new players emerge alongside Rich. Guys like Gerd Lutter of Marimpex cultivating ties with Soviets, Iranians, even supplying apartheid South Africa.
Then there was Oscar Wyatt.
Oscar Wyatt, yeah. Coastal Corporation, hard-bitten Texan, famously befriended Saddam Hussein, actually used that personal link to get U.S. hostages released during the first Gulf War. Shows the unique personal power these traders had.
Incredible. And the Koch brothers, too.
The Koch brothers transformed their U.S. refining business into a global trading powerhouse. Even the Seven Sisters, the majors, had to adapt.
They couldn't ignore it anymore.
Nope. They started their own trading arms, Shell's Petra, BP's Anro, often based in Rotterdam. It was a clear sign the center of gravity had shifted decisively to those agile, often secretive offices in Switzerland. They were setting the pace, even trading with the majors.
Okay, this next part is where the story gets almost unbelievable. These traders weren't just moving commodities, they became de facto central banks for entire countries in crisis.
Yeah, literally saving nations from the brink. Their financial power became immense, and their willingness to use it was just audacious.
Tell us about Jamaica.
All right, Jamaica, early 80s. The country was facing bankruptcy, literally running out of oil. Hugh Hart, the energy minister, gets a frantic call Friday evening. The central bank can't raise $10 million for the monthly oil cargo.
They would run out by Sunday.
Exactly. Total blackout looming. So Hart, in desperation, calls Mark Rich at 2 a.m. Swiss time.
He wakes him up.
Yep. And Rich, without a single signed contract, just diverts a tanker of Venezuelan crude heading to the U.S., tells it to stop off in Kingston.
Just like that?
Just like that. Less than 24 hours later, 300,000 barrels are unloaded. National disaster averted. It showed their power, their willingness to stake their money where other companies wouldn't dare, provided a lifeline when no one else would.
And Jamaica remembered that.
Oh, they remembered. Became a very profitable relationship for Rich's company for decades.
And this wasn't unique, right? Resource nationalism created similar opportunities elsewhere. They became indispensable.
Absolutely. Look at Guyana. Nationalized its bauxite in '71. The CIA predicted failure, thought majors would shun them. But Philip Brothers stepped right in, became their aggressive new marketing agent, sold their entire output.
And Jamaica, again, Rich became dominant.
Hugely dominant. One U.S. official said, Rich plus Co. virtually hijacked Jamaica's economy. They paid Jamaica in advance for bauxite, lent huge sums for the oil refinery.
And even funded the bobsled team.
Yep, the famous Cool Runnings team for the '88 Winter Olympics, and their '84 Olympic team too. It shows how they thrived on market fragmentation, stepped in where big corporates or traditional finance retreated. For Rich, these close ties with struggling governments were incredibly lucrative.
But this amoral approach, profit over politics, it led them into some very controversial areas, trading where others wouldn't touch.
That's where their reputation as the last bank in town gets a darker edge. They openly traded with apartheid South Africa, despite UN embargoes, widespread condemnation.
Hugely profitable for them, wasn't it?
Massively. Rich called it his most important and most profitable business then. They kept the oil flowing, using secret codes like Tulip for South Africa, Udo for the trader in charge, prolonged the regime's existence, cost South Africa an estimated $10 billion extra.
And Rich charged huge premiums.
Oh, yeah. One 1979 contract had a 126% premium, just pure capitalization on the embargo.
And then there was Kobuko, the Burundi scheme.
Even more audacious. Mark Rich plus Co. created Kobuko, a joint venture with Burundi, one of the world's poorest landlocked countries.
Which needed very little oil itself.
Exactly. One tanker could cover Burundi for 6 years. But Kobuko was just a front, a sophisticated scheme to buy cheap Iranian oil. OPEC sold it at a discount to poor countries and then resell it at massive markups globally.
Including to South Africa.
Including South Africa. Rich plus Co. just diverted the oil meant for Burundi, pocketed the difference, made $42 million in interest alone on a 2-year loan, thanks to high dollar interest rates. Rich loved it, telexed everywhere. We want more Kobukas.
It's a stark illustration of money, not politics.
Undeniable. Turning global problems, moral issues, into staggering profit.
But that ethos, that willingness to cross lines, it eventually caught up with Mark Rich himself, didn't it? Leading to that huge legal battle.
Yeah, his willingness to bypass embargoes, especially trading Iranian oil during the 1980 U.S. hostage crisis, a massive $200 million deal with John Deuce, finally led to a U.S. federal indictment in 1983.
For the charges.
Severe ones. Tax fraud, avoiding taxes on over $100 million in income through complex schemes and trading with an enemy.
And his reaction?
When asked if he felt guilty about the Iranian oil during the hostage crisis, he just said, I feel comfortable.
Wow.
Facing decades in prison, he fled to Switzerland, renounced his U.S. citizenship, spent nearly 2 decades as a fugitive, FBI's 10 most wanted list. became an international pariah, at least to the U.S. government.
And that highlighted the industry's nature, transnational, opaque.
Exactly. Showed how national laws could often be sidestepped by operating in places with light touch regulation, strong banking secrecy, his escape, Switzerland's protection. It set a complex precedent, showed the industry could operate sometimes beyond single-state jurisdiction.
Okay, moving into the 80s and early 90s, there's another shift. A new breed of trader, a new way of doing business. Financialization kicks in. Talk about paper barrels.
Right. This is where Andy Hall at Fibro Energy comes in. A total contrast to the old school guys like Rich. Hall was a self-taught maths whiz kid focused on deep market analysis, not schmoozing dictators.
So what did he do during the 1990 Iraq invasion of Kuwait?
While everyone else was scrambling for physical barrels, Hall made this incredible speculative bet on rising prices. He simultaneously hired dozens of VLCC supertankers to buy physical crude, and then immediately sold higher-priced futures contracts for that same oil. Agreements to sell it later at a locked-in higher price.
So he locked in the profit without even moving the oil much?
Essentially, yeah, it was a complex financial maneuver. Locked in an estimated $600–800 million profit for Fibro, just from that play. Fibro's earnings that year hit nearly $500 million.
Unprecedented.
Totally. It showed the shift from relationship trading to sophisticated financial analysis, leveraging new instruments, pure market speculation. Earned Hall the nickname God among traders, showed a different skill set was now needed.
And the old guard, the traditional houses, they struggled with this shift.
Immensely. Look at Philip Brothers merging with Salomon Brothers in 1981. The Fibro Metals guys, used to physical deals, long-term relationships, they just couldn't keep pace with Salmon's bond traders, the fast-paced financial innovation.
Different worlds colliding.
Completely. This new market needed deep pockets, global reach, and serious financial know-how. Many established physical players lacked that or were too slow. John Deuce's Transworld Oil, a giant in the 70s, collapsed after a disastrous attempt to corner the Brent market financially, got outmaneuvered, showed the huge risks. Old ways weren't enough anymore.
And these internal struggles, this pressure, it even tore apart Mark Rich's own empire, right? Leading to his ouster.
Yeah, by the early 90s, Mark Rich plus Co. was reportedly riddled with paranoia, backstabbing, financial woes. Rich's fugitive status didn't help. His original partners were gone. His personal life was messy divorce, his daughter's illness.
So a new generation saw an opportunity or a threat.
Both, probably. A quartet of younger, ambitious traders, Willie Strauthot, Manny Weiss, Claude Dauphin, Denny Dreyfus, saw the company endangered by Rich's issues. They staged this corporate coup.
How did that go down?
Delivered a brutal one-page manifesto. Demanded Rich sell his shares, step down, even change the company name to escape his tarnished reputation.
And Rich agreed.
Initially, yeah. But then, true to form, he apparently tried to renegotiate the terms. One trader said Rich would renegotiate his children. That was his DNA.
Couldn't help himself.
Seems not. So he was definitively ousted in 1993. And that paved the way for two new giants. Glencore, led by Strauthot, and Trafigura, led by Dauphin.
A formative moment for them.
Absolutely. Shaped their approach. Keep ownership tight among you partners, and crucially, move even deeper into the shadows, away from the public scrutiny that hit Rich.
Okay, so the Soviet Union collapses. Communism falls across Eastern Europe. Traders see a fire sale.
Pretty much. A closing down sale, as the book puts it. They rushed into Russia, saw immense profits in the chaos.
Who are the key players there?
The Rubin brothers. Their company Transworld was already there. They stepped up big time, financed operations, supplied raw materials like alumina to smelters in return for finished aluminum, a practice called tolling.
Like early Mark Rich deals.
Exactly. They even bought stakes in Russia's biggest aluminum smelters, made billions, eventually became UK property billionaires.
And Mark Rich plus Co. was involved too.
Oh, yeah. They got fuel oil from guys like Artem Tarasov, the USSR's first legal millionaire.
Yeah.
He was making fortunes off Soviet inefficiencies, like refineries literally pouring excess fuel into holes in the ground.
Unbelievable.
Rich's team wooed Tarasov. Lavish parties, boat trips on the Thames, offered him any dancer I wanted, made him a loyal client, gave them access to cheap resources.
But it was dangerous, right? The Wild East.
Incredibly dangerous, lawless, marked by violence. Felix Lvov, a commodity trader, was murdered in Moscow in 1995. Huge risks involved.
And it wasn't just Russia. They went wherever traditional finance wouldn't. Cuba, for instance, after the Soviets pulled out.
Yeah, Cuba was facing total economic collapse, cut off from Soviet aid. Traders like Vitol's Ian Taylor became a crucial lifeline.
Attending Castro's dinner parties.
Apparently, Taylor became a regular. Sat late into the night while Castro lectured on geopolitics, fired questions at his capitalist guests. An odd couple, but vital.
Vitol took on huge risk there.
Massive financial exposure to Cuba. As daring, relative to Vitol's size then, as the later Libya deal. When Cuba's sugar crops, their repayment method failed, Vitol even got into the hotel business there just to recoup its investment. Flew around in Castro's personal helicopter, apparently.
Just another day at the office.
For them, maybe. Claude Dauphin's Trafigura also stepped in, financing Cuba's oil inventories. They basically kept the economy afloat. Shows them stepping into the void, becoming essential financiers for isolated regimes.
But this era, this aggressive expansion, it also saw some really stark ethical problems, even outright fraud.
Definitely. Glencore's Romania deal in 1995 is notorious. They supplied cheaper blended oils but faked the documents to make it look like the higher grades they'd promised.
How did they do that?
Used the Eilat-Ashkelon pipeline again, mixed different crudes, even mixed crude with cheaper fuel oil, then passed it off as the expensive stuff. A UK judge found outrage and displeasure at Glencore's fraud, ordered $89 million in compensation, called it a suite of false documents.
And then Enron.
Ah, Enron. The shooting star that crashed and burned, tried to invent new markets for everything, collapsed spectacularly in 2001. Hidden debt, inflated profit.
Didn't they try to buy Vitol?
They did. Offered to pay Vitol's owners entirely in Enron shares. Ian Taylor, Vitol's CEO, turned them down. Smart move. Saved them from disaster as Enron stock became worthless. Enron became the symbol of corporate greed and cooked books, reinforced the traders' wariness of public markets.
Then came the commodity supercycle, fueled by China. And that triggered a new scramble for Africa.
Yeah, soaring demand meant traders rushed into Africa. Resource-rich, but often institutionally weak nations.
And that brought new corruption issues, like Dan Gertler in Congo.
Dan Gertler, yeah. Young Israeli diamond guy became the gatekeeper to Congo's mineral wealth. Close confidant of President Kabila, boasted, "I'm shaping it like no one else." Even claimed he deserved a Nobel Prize.
But the U.S. accused him of corruption.
Accused him of using his influence for hundreds of millions of dollars in opaque knockdown deals, exploiting the nation's wealth. And Glencore, despite their own due diligence flagging Gertler's unsavory business associates, did over a dozen deals with him worth over $1 billion. Relied on him as their fixer.
Then there's the Probo Koala scandal. That was horrific.
Truly devastating. Trafigura, 2006. They bought cheap, high-sulfur gasoline from Mexico, couldn't do the toxic caustic washing process in Europe due to environmental rules.
So they did it on the ship.
Yes, on the tanker, the Probo Koala. Then, after being rejected by Lagos, they paid a dodgy local company in Côte d'Ivoire just $20,000 compared to a $700,000 quote in Europe to dump 528 cubic meters of this highly toxic sludge.
Dumped it where?
In populated areas of Abidjan. Led to over 100,000 illnesses, skin lesions, respiratory problems, neurological damage, 17 confirmed deaths.
Unbelievable negligence.
Shocking disregard for human life. One Trafigura co-founder later called it so obviously stupid. Trafigura eventually paid $30 million to settle a UK case. Laid bare the human cost when profit is the only motive.
And sometimes, even in less tragic ways, they just stepped in where the state failed, like Cargill printing its own money in Zimbabwe.
Yeah, hyperinflation in Zimbabwe, 2003. Cargill couldn't buy cotton with the worthless local currency, so they printed their own banknotes, Staley bucks named after the local boss.
Seriously, with Cargill's logo?
Yep, logo, exec signatures. Worth about 2.2 million Zim dollars then, backed by funds in a local bank. And people accepted them. Farmers, businesses, saw them as more reliable than the Zimbabwean currency.
Became a parallel central bank.
Effectively. Cargill even ran newspaper ads telling people to treat the notes as cash. Just shows their ingenuity, their power, stepping into the void when institutions collapse, all to keep the supply chain moving and profits flowing.
So the real engine behind the massive profits, the supercycle, was China. Its transformation just reshaped everything.
Absolutely. Deng Xiaoping's reforms kicked off decades of double-digit growth. China became the world's factory. Mass urbanization, 500 million people moving to cities. Unprecedented demand.
That's when they hit the commodity sweet spot.
Right, around 2001. Per capita income passed $4,000. Unleashed huge consumer demand, cars, appliances, diet changes, more meat means more grain feed, and infrastructure. Highways, railways, power plants, new cities. Scale comparable only to post-WWII reconstruction.
Just an insatiable demand for raw materials.
Exactly. From China, India, other developing nations, drove prices sky high. created the supercycle lasting decades, up to around 2011. In that period, the combined net income of just Vitol, Glencore, and Cargill hit $76.3 billion.
76 billion.
10 times their profits in the 90s, often surpassing iconic brands like Apple or Coca-Cola back then.
And even when the world economy tanked in 2008, the traders found ways to profit.
Oh, yeah. Turning turmoil into profit is kind of their specialty. Cargill's Geneva traders, following that Andy Hall analytical approach, they accurately predicted the crash after Lehman Brothers failed.
So they bet on prices falling.
Took massive short positions in oil and freight futures.
Right.
Even as prices were still climbing initially, they held their nerve. And they were spectacularly right.
Oil prices collapsed.
Plummeted from $147.50 peak to just $36.20 a barrel in months. Cargill made over $1 billion from those trades in late 2008, early 2009.
$1 billion from the crash.
Yep. Shows how speculation, even if they downplay it, is central to their model. That idea of optionality in contracts, either the tolerance on quantity became a license to print money in volatile times. What was a logistical buffer became a tool for massive profit.
But sometimes these speculative moves, these interventions, had devastating, unforeseen consequences, particularly with something like food.
Tragically, yes. Glencore in 2010, they were Russia's biggest wheat exporter. Severe drought hits the harvest.
Okay.
Glencore's Russian grain boss, Yuri Ognev, goes on state TV, publicly calls for a complete export ban, knowing this would drive prices up.
And Moscow listened.
Implemented the ban 2 days later. Global wheat prices surged 15% in 2 days, more than doubled over the next few months. Glencore's grain unit had its best year ever, $659 million profit.
Yeah, the ripple effect.
Devastating, especially in the Middle East and North Africa, heavily reliant on Russian wheat. As another trader, Ian McIntosh from Louis Dreyfus, said, the easiest way to create political problems is to have hungry people.
The Arab Spring link.
Rising food inflation was undeniably one of the sparks for the Arab Spring uprisings, a direct, if maybe unintentional link between a trader's market strategy and massive geopolitical upheaval, immense human suffering.
And beyond the markets, they also actively shaped policy, lobbied governments, even in the West.
Absolutely. Archer Daniels Midland, ADM, one of the big ABCD agricultural giants, their longtime CEO, Dwayne Andreas, famously saw politicians as playthings.
Playthings.
Yeah. Through aggressive lobbying, Andreas got ADM huge U.S. tax breaks for ethanol blending, tariffs on imports, loan guarantees for ethanol plants.
And ADM dominated ethanol production.
Accounted for 80% of U.S. corn ethanol by the mid-90s, so they were the biggest beneficiaries by far. This policy, mandating billions of gallons of ethanol in gasoline, it was backed by this weird coalition. Right-wing security hawks worried about Mideast oil dependence, farmers wanting higher corn prices, even some climate activists pushing fossil fuel alternatives despite ethanol's own environmental issues.
And ADM ramped up lobbying.
Dramatically. From $300K in 2006 to $2.1 million by 2008, shows the influence they could wield in Washington to secure policies worth billions, shaping energy and ag policy for their own gain.
So as their power and wealth just exploded, the secrecy couldn't last forever, right? They became too big to ignore.
Exactly. Glencore's IPO in May 2011 was that watershed moment. First time the true scale, the insane profitability of these private firms was laid bare.
How did the traders react?
They were used to total secrecy. Many found out their colleagues' shareholdings, the company's real value, only when the prospectus dropped at 6 a.m. that morning, gathering the car park to read it.
Quite a scene. And it was a huge IPO.
Raised $10 billion, biggest listing ever in London at the time. But that transparency, it meant, as one exec said, nobody knew the extent of their profits until then. For decades, companies like Fibro treated their balance sheet like the atom bomb of secrets. Glencore's IPO was a turning point, changed the game, no more operating completely unnoticed.
And with that financial firepower, that visibility, they evolved again, becoming merchants of power, financing nations, influencing geopolitics directly.
This is maybe their most striking evolution. Glencore used pension money from Ohio and West Virginia teachers, no less channeled through complex Irish and Cayman vehicles.
Like oil flow, SPV1, DAC.
Exactly. Use that money to help finance Iraqi Kurdistan's independence push. Advanced $3.5 billion to Kurdistan, often used that same Isla-Ashkelon pipeline, like Rich, to move disputed crude through Israel. Huge diplomatic implications.
And elsewhere.
Glencore lent $1.45 billion to Chad to buy out Chevron's oil stake. Vitol channeled over $6 billion in loans to Kazakhstan state oil company KMG, basically became its biggest financier.
And Russia. even with sanctions.
Despite sanctions after Crimea, Glencore and Vitol somehow rustled up a staggering $10 billion in loans for Rosneft, the Russian state oil giant. Putin personally gave Glencore CEO Ivan Glasenberg the Order of Friendship.
Wow, these oil for loans deals show them directly enabling state actions.
Absolutely. Becoming indispensable geopolitical actors, operating where state banks or international bodies couldn't or wouldn't.
But more power, more visibility, that brought more scrutiny, a reckoning.
Definitely. The $9 billion fine against BNP Paribas in 2014 for busting U.S. sanctions, especially for hiding CBA in transfers, was a huge wake-up call.
Showed the U.S. was getting serious.
And not just with banks. They started targeting traders partners. Dan Gertler in Congo, Oleg Deripaska in Russia, even company co-founders like Gunvor's Gennady Timchenko tag as being in Putin's inner circle.
The old ways weren't safe anymore, like carrying cash bribes.
Historically, cash bribes and briefcases were literally tax-deductible in Switzerland. Paul Weiler, ex-Glencore, told that story of being stopped at Heathrow with 500,000 pounds cash, just saying he was going gambling. Now, severe legal risk under laws like the U.S. Foreign Corrupt Practices Act, FCPA.
And information is harder to hoard.
The internet, investigative journalism. The democratization of information has eroded their old edge. Plus anti-globalization sentiment, consumers demanding ethical sourcing, traceability. Opaque deals are much harder now. The landscape's fundamentally shifted.
So, facing this new era, what's the future hold?
Yeah.
Big challenges, right? Climate change, new competition.
Huge challenges.
Yeah.
Climate change is existential for an industry still so reliant on fossil fuels. Glencore is still the world's biggest coal trader and miner. That's a tough position long term.
And new competitors are emerging.
Yeah, national oil companies, Saudi Aramco, Rosneft, they're building their own sophisticated trading desks, cutting out the middlemen, taking market share.
Then China.
Chinese trading houses like Zhuhai Zhenrong, often run by colorful figures like Crazy Yang. They have fewer ties to the U.S. financial system, so they can operate where Western firms are sanctioned. A double threat.
Yet they still know how to profit from chaos, like the 2020 oil price crash.
Oh yeah. When oil briefly went below zero, they thrived. Stored over 1 billion barrels of unwanted crude. Glencore hired the world's largest tanker, the Europe, just to store the glut.
Still masters of volatility.
But the pressure is immense now. European banks are getting very wary of financing polluting or ethically dubious deals. And the younger generation of talent, they want to work for cleaner companies. It's forcing a real shift.
Glasenberg himself downplaying trading now.
Ivan Glasenberg said, trading is not a big part of the company anymore for Glencore. And Gunvor's CEO, Torbjörn Turnquist, put it bluntly, I think the old-style traders, the mark-rich, die-hard breed, some of them don't quite get it until they're sitting and talking with the FBI. Then they get it.
The game has changed, irreversibly.
Seems so. It's a fundamental shift in their ethical and operational world.
So summing up, from backroom deals in war zones to massive bets on global markets, we've seen how these commodity traders have quietly, powerfully shaped our world, often operating way beyond conventional power structures.
Yeah, they are the first true globalizers in many ways, connecting the world's resources to its markets, creating staggering wealth, wielding immense, often unseen influence.
And this deep dive really reveals that the stuff powering your car, heating your home, building your phone, it's all tied to this complex, often morally gray global network.
Understanding these forces helps you see the real costs, the real benefits of our interconnected world. How a decision in a quiet Swiss town can cause ripples across continents, affect food prices, political stability.
It's a reminder the global economy is way more intricate, driven by more hidden actors than we often think.
Absolutely.
So as that veil of secrecy keeps lifting, as the world demands more transparency, more responsibility, what unseen forces are shaping the next big shift in global resources? And who are the new shadowy figures waiting to capitalize on the new rules? The world for sale is definitely evolving. The traders are watching, adapting. The question is, are you watching too?